So, what do you do when a new stock hits the market and just goes absolutely wild? You've got no history, no charts to look back on, just pure chaos. How in the world is anyone supposed to figure out what it's going to do next? Today, we're going to try and do just that. We're breaking down the wild case of FRMI Incorporated, ticker FRMI, to see how analysts try to make sense of the complete unknown.
Okay, just get a load of this. In just 3 days, FMRI's price swung from a low of $24.50 all the way up to almost $37. That is a 50% price swing. It's insane. This isn't just your normal ups and downs. This is a full-blown financial roller coaster, and we're strapped in right at the front.
So let's trace the path of this storm day by day. Day 1, it opens at 25 and just rockets past 32. Awesome, right? Well, day 2, it gets yanked back down, and by the time the bell rings on day 3, it's just kind of sitting there at 28.60. A massive spike and then a slow bleed out. So in the middle of all this, how do you even begin to find your bearings? Well, that is exactly where the analyst's toolkit comes in. See, even when you have almost nothing to work with, there are some really specific tools designed to sniff out signals that are hiding inside all that market noise. So let's open up that toolkit and see what we can find. First tool we're grabbing is called On Balance Volume, or just OBV for short. Now, the easiest way to think about this is like a running score for the stock. If the stock closes higher, you add the day's trading volume to the tally. If it closes lower, you subtract it. It's a really clever way to see if the big money, the institutional investors, are quietly buying in or cashing out.
And for FRMI, the OBV score is trending down, and that right there is our first major clue. It tells us that even with all that initial hype, more shares were actually traded on the days the stock went down. In other words, the selling pressure is building up behind the scenes. For an analyst, that's a pretty clear sell signal.
Okay, next tool, the VWAP. That stands for Volume Weighted Average Price. Now, this isn't just your simple everyday average. You can think of it as the stock's true center of gravity for the day, because it cares more about the prices where tons of shares were traded. It's an absolutely crucial benchmark.
And here's where it gets really telling. FFRMI is currently trading below its VWAP. You see that? Its price is $28.60, but its true average price is over $30. Now, for traders, this is a classic bearish sign. That's just Wall Street talk for negative. It suggests the stock is losing steam, and that, right now, the sellers are in control.
So we've got two bearish signals. The case seems pretty clear, doesn't it? Sellers have the upper hand. Well, not so fast. This is where the story gets really interesting because, not all the evidence is pointing in the same direction. This is the classic analyst's dilemma. On one hand, the bear case, the argument for the stock to go down. It's pretty strong. We've got the OBV sell signal, the price is below VWAP, momentum is negative. But other types of analysis are saying the stock has fallen into what's known as a support zone. A support zone is like a price floor, a level where buyers tend to step in and say, hey, this is cheap enough for me. That creates a bullish or optimistic case. So now we've got a real fight on our hands. So we have evidence pointing both ways. It's a classic tug of war between the bulls who want to buy and the bears who want to sell. But before we even think about picking a side, we have to talk about the massive elephant in the room, the fatal flaw in all the evidence we just looked at. I mean, let's be real for a second. We saw that downward trend after the huge initial pop. We have a clear sell signal from the OBV. The price is weak compared to its VWAP. The case for selling seems pretty solid, doesn't it? Seems kind of like an open and shut case, right? Wrong. Every single piece of analysis we've done, every single indicator we've talked about, is based on a grand total of 3 days of data. 3. That's it. That is the entire history of this stock. And that one little fact changes absolutely everything. And this analogy just nails it, doesn't it? Analyzing 3 days of stock data is just like trying to predict a whole year's worth of weather by just looking at what happened from Friday to Sunday. Yeah, you might see a pattern. Maybe it rained all weekend, but you have zero long-term context. You can't possibly know if a monsoon is coming. So with all this uncertainty, what on earth can an analyst actually do? You can't make a confident prediction. So you do the next best thing. You plan for possibilities. You stop trying to predict the future, and instead, you map out the key price levels to watch. You basically create a roadmap for whatever might happen next. And here is that exact map. These are the critical levels. Above the current price, you've got your resistance levels. Think of these like price ceilings, or sellers are likely waiting. Below the price, you have your support levels. Those are the price floors where buyers might step in. The key battlegrounds to watch are that first floor at 27.80 and that first ceiling at 31.55. So here's how the bearish or negative scenario could play out. Step 1. If the stock breaks through that first floor of support at 27.80, it's a bad sign. The next logical target for sellers would be the absolute low it ever hit, all the way down at 24.50. And what about the bullish or optimistic scenario? Well, if the buyers can find the strength to punch through that first ceiling of resistance at 31.55, then their eyes are going to be on the big prize, that all-time high of nearly $37. If they break that, it's a huge signal that the buyers are taking back control. Okay, so we've looked at the tools, the conflicting signals, the fatal flaw in the data, and the potential scenarios. It's time to bring it all home for the final word. So, after all that, what's the actual verdict? The final call is a sell signal. But, and this is the most important part of the whole thing, it comes with only medium confidence. Now, why medium? Because while the few bearish signals we have seem a little bit stronger, the confidence level is dragged way down because our entire sample size is just 3 days. That medium tag isn't a detail. It's a huge warning sign. And this really is the ultimate takeaway from this whole exercise. The analysis basically concludes that anyone trading this stock needs to be extremely cautious. Without any meaningful history, trying to figure out how much risk you're taking on is, well, it's almost impossible. You're flying blind. Which leaves us with one final and really crucial question. When you're looking at a brand new, super volatile stock that everyone is talking about, you have to ask yourself, are the signals you're seeing real signs of a future trend, or is the loudest signal you're hearing simply the noise of the crowd?